for. That's up to you. But you have to activate the ticket the day using it by emailing or texting in your reservation before 6 p.m. the day of the show. They send you a confirmation if you're on a guest list, and you and your guests do go for free. Please remember to send in that email or text because it does activate the ticket. Other than that, they are normally $20, but because of student activities, they're $5. And again, it allows 2 people on the ticket, and it's valid until the end of the year. And that's it. If you would like one, raise your hands real fast. Okay. Anyone in this class who would like a ticket?
All right, while he's distributing that, I want to talk for a second about Beth Lillard, because there is a consistent aspect of her doing as well as she has, given that what her process sounds like is pretty ordinary. And what it is that she has invested predominantly in companies that are based locally near Minneapolis. It means that she's familiar with the local small companies. It means that by being geographically focused, she has the time and the ability to develop the kinds of relationships with management that she talked about. And in fact, as a specialty, there are a number of value funds that are locally focused, and they do, by and large, extremely well. So if you find a place in life where you really want to live, and you want to spend all your time there, Beth is a good example of the possibilities of doing that as a successful investor. The bad news is she now wants to move to New York. Oh well. Now, tonight's speaker is actually, in almost every sense, one of the high points of the semester. He is first a graduate of Columbia College, the business school, the precursor course to this one, and the law school, right? So you don't get more Columbia than that. He is also, 2 years ago when Warren Buffett was talking about, once he retires, who he would give his money to manage, or his clients' money to manage, the first person he mentioned was this guy from Boston from the Baupost Group. You will hear from him, that is Seth Klarman, in the last class of this course. Second person he mentioned is it Greg or Gary Alexander? I never get it right. Greg, right. Second person he mentioned is Greg Alexander, who would be happy to speak, except he's a germaphobe, and we're all just too toxic in this one room to allow him to do it. When you meet him in life, you'll know, because he'll keep his hands behind his back and won't shake hands with you. The third person he mentions, last but not least, was tonight's speaker, Lee Lu, who in addition to that happens to manage all of Charlie Munger's money. I think beyond that, he needs no introduction. Should I talk about your record? Okay. I've been an investor with him for 4 years. We have 4 times our money in 4 years.
Boy, you never know when you have an investor, also you're a professor. You never know what he's going to say. You just happen to be lucky to come off of a good year. Lucky I didn't really speak up in 2008. Anyway, so what a great pleasure to be back to Columbia. This really is where my whole life in America started. 21 years ago when I first came here. I could barely speak the language. I didn't know what I was doing. Never planned to be here. So it was really in Columbia that really I had a new life. And it was really this very class that really started my career. This is about 20 years ago when I first came here, maybe a year or 2 after I got here. I was just petrified. It was all the student loans and astronomical numbers. And I grew up in China in the 60s and 70s. Back then, there was really no commerce whatsoever. Nobody knew anything about making money. You're not supposed to. And so when I first came here, I was just scared to death about how ever I can repay the debt. And so one of my friends early on, maybe this is a year or two after I got here, said, well, if you ever want to learn how to make money, there is a lecture that you have to go listen. And his name is Buffett. Now, my English wasn't too good at the time. I thought Buffett means a thing. There's only one key difference, right? And, being a hungry Chinese student, so all you can eat really hold a very dear to me. So I thought anybody named free lunch got over something. So I showed up the lectures. Turns out, years later when I asked for it, that was the very first time he came back to speak. I think Bruce was at your class with it the very first time he came. This was really early in the 90s. Now, I know nothing about it. I couldn't really distinguish the one teeth from the two teeth. But what I heard that night completely changed my life. He only basically said three things, which is really laid out in Ben Graham's book, which I'm sure all of you have read very well. That a stock is not a piece of paper; it's a piece of ownership of the company. You have to always look at the stock as a way of buying a piece of ownership of the company, and that you always have to figure out what it's worth intrinsically, and the price is substantially below that to allow a margin of safety. So that if you are wrong, you wouldn't lose as much money, and if you were right, you would make far more money. And then lastly, this concept of the market, that most people are in it for the short term. Really don't know what they're doing most of the time, which allows for a framework of how you really deal with the day-to-day volatilities of your positions. So those are all very, very simple, straightforward, very powerful concept. Up until then, I really have no idea what is a stock. And I always view the stock market as a bunch of manipulators and a bunch of unsavory characters try to manipulate from the back home, moving money from one pocket to the other. I never thought it from a positive light, from allocating precious resources to allow the more efficient working of the economy. So after that lecture, I really started basically 2 years of concentrated, intensive study of everything about him, ever written about him, everything he wrote about, and also began to learn a broad spectrum of anything related to investment. So 2 years after that, I bought my first stock, and so that launched my career. So after I graduated, I sort of invested throughout the college days and business school, law school. And after I graduated, I worked at an investment bank for about a year, and it was a mistake. And so anyways, after a year after that, I quit. And to start with a friend without any, at the time, really honestly, I had no pedigree, never worked with anybody, never had an audit track record. And I never worked for a fund. But it turns out to be a slight advantage in a sense. It's never an advantage in terms of raising money, but it really is an advantage if you think about that you're not really tainted by all the things that is going on Wall Street, but most of them are just really totally wrong. And of course, the first year I managed the money, I lost 19%. So that was sort of how I started the business. So if you can really start from where I came from 21 years ago, I'm pretty sure all of you guys will do far better than I did. Now that's really the good aspect of really running money, but let me also say something about how you can fail. Now, being a value investor, you always look at the downside before you look at the upside. And so before you ever want to decide whether you're good in this game, investment, you really want to find out how possibly you can fail in this game. It really is, it's not an easy game because it were easy given the enormous incentive and reward built in this business. It would assume everybody eventually are doing it. That's obviously not not the case. And so it really is
there's kind of all sorts of ways you can really fail. So you want to really look at various different ways of examining who you are and whether you're actually going to be good at it or like to do it. You know, in terms of constantly a career, I always say that if you can ever find something that you love to do and you're also good at it, you're almost guaranteed to live a pretty happy life. It doesn't always happen, but I would assume that really is the best investment of your time, particularly if you're in school, to explore as much as you can, but find the things you really like, the ones you're actually good at it. It's a reasonable, accurate assessment. If you can find that, almost always you can be better than your competitor. Virtually everything that's worth doing is a competitive game. And if you've been doing it with a certain amount of interest and passion, and you always sort of would have spent a little more time because you wouldn't consider it important. That really over time accumulated would have added to enormous value to you. And so that's I think probably the best way to find failure to students. Now back to the game of investment. Now this concept of margin of safety is really an essential concept of being a successful investor. Because investing in essence is really the prediction of the future of what will happen. Now the future is inherently unpredictable, as you know, and you will always be dealt with all sorts of different surprises. And so some of them are positive, a lot of them are negative. So what you really want to do is build in a safety net so that whatever happens, it will not really crush what you do. Buffett always say there's only two rules you have to remember investment. Number one is never lose money. Number two is never forget about number one. And so if you can really successfully know what you're getting into, then you pretty much can navigate. But the trouble is really to really know what you're doing. The most difficult thing. Most people would say they know what they know. But most people have a trouble to know what they don't know. That's really where it fundamentally goes. The world is divided into people who know they don't know and those who don't know they don't know. And that's really difficult. To really be very honest with yourself intellectually, to recognize the things that you should. If you really know what you don't know, and you would not really pull any triggers in the way that most of the Wall Street traders are doing, and most of the hedge funds are doing, and most of the mutual funds are doing. If you're truly intellectually honest with yourself, you wouldn't do anything. So that's why I said, look, early on, but not really ever working with anybody, simply take Bruce's class. It turned out to be an advantage because that's what you're being taught. You really want to know what you're getting into, particularly know a position beforehand of the things that you don't know. And most of the things that you don't know very little. It's not that easy to develop the insight. The game of investment is really a continuous learning. It is a learning game in a sense. Virtually everything affects the correct investment decision. It never stops. They always change. The minute you fall, you really lay it out as thesis, you figure out what the performance has been in the past. Well, it changes. Because you're not really investing in the past, you're really investing in the cumulative cash flow of the future. And so virtually everything really impact a correct investment decision changes all the time. And so you have to want to find a certain setup where you can really concentrate your effort into deep learnings to the point that you can actually honestly say that I know something that most other people don't know. And there's all sorts of different things that I don't know. I know I don't know, but somehow they do not really factor into the decisions of correct decisions of the purchase because it allows a huge margin of safety. And so you're buying $1 at 50 cents. So that all the other things you don't know, it can turn out to be all against you. It would still be okay. And that's really, really not easy. It really is not easy. If you really go into any specific examples, then you would quickly come to the same conclusion that I do. That, the business is a brutally competitive proposition. Because that really dominates the human activities in modern era. That's what really most people are really thinking and working at. And so it's always a dynamic change. So we really truly know how the business will perform from now until the time we want to close the position. It really is a mission impossible. And so that's why you really truly have to really know what you don't know. You also want to build in certain things that give you a certain edge, one or two big insights that can only come from a right frame of mind, years of continuous intensive study. And you won't really be given an opportunity too many times because it's really not that easy. But when you find those insights in the long road, at the end of the long road of the study, you also want to have the guts and courage to back up the trial and to ignore the opinions of those of other people. Because you really, if you follow what everybody else is doing, chances are you're going to really end up with everybody else, and so you become an airfish. And if you really want to ever distinguish yourself to be a better investor, you just have to stand on your own. And there's no shortcut. People say, look, well, how about we just really copy everybody else and person that bias? We just can copy other people's insight. That usually doesn't work. Because sooner or later, inevitably, position always turns against you. That's what that insight is critically important for them. If you really don't, if this position turned from 100 to 50, you don't really know whether they're going back 100 to 200 or they're going all the way down to 0. This is where the insight really is important. And so copy other people's insight just never really work. You just have to do your own work. There's no substitute. And so this is really why it is difficult. On the other hand, the reward of that is so huge. So it's all right. It's all right. And Greenwald used to say, look, if you just all your lifetime, your entire investment career, say of 40 years, if you only come up with 10 different investments, you will still be very rich. You will still have an extraordinary investment result. And that's really all there is. And this is really also illustrates just how difficult it is to really find a subject matter that you can say that I really truly know this better than any other people. So how do you really go about developing insight like that? So the way to do that really is to pick up one business, any business, and truly understand it. I always sort of tell my early days, I have some interns. The things I always want to say when I give somebody a company to analyze, I want to say, look, just to say that you got a distant relative who passed away, unbeknown to you, he had this company, whatever that company is. And all of a sudden it said, this is the company. Now you inherit it, you own it 100%. And so what are you going to do about it? What do you want to know about it? That is the mentality you're going to take to really understand any business. And I would really strongly encourage you to start by understanding one business's inside and out. That is better than any training you could ever possibly do. It's better than any work you could possibly read. And it doesn't have to be a great business. It could be any business. But to the point that you really feel that I own 100%, because I really truly know 100% about this business. I know how it runs. I can run it. And I know somebody else is going to run it better. If you can really start, that really gave you a huge leg up against just about any other investor is really currently on the conventional funds all on Wall Street. Because most people really don't take that effort, which is really sad. And because most people don't really take that first concept correctly. They really do feel it's a piece of paper that can be pushed around and be traded. It's so easy to trade. So people really can't really resist that temptation. But if you really truly view that as a business given to you as inheritance from one of your relatives, you wouldn't really treat that too easily. And you wouldn't really view all the news related to that business too easily. And you wouldn't really be able to distinguish information from voices, knowledge from information. So you wouldn't really view the real knowledge about the business, how it can be run. Okay? So if you can do that, that is the great beginning. If you can start with that one, that really gets you over. Now, even assuming you really did all the work to develop it inside, you now really understand how one particular business is really operated, and then all of a sudden you say, hey, that business is for sale, half of the price of what I think it's worth. Let's just back up the truck. So we might really be looking at a lot of money. Well, the next thing you might really find out is that really sort of from what you think is 50% of the discount of the intrinsic value, it really runs down another 50% against you. It really has nothing to do with what you think of it or what other people think of it. But particularly, maybe you even just go into a financial crisis. You know, when I started the business in '97, so I was right in the middle of the Asian financial crisis, the last 97, 98. And then a few years later, there was a burst of internet bubble from 2000 to 2002, and then a couple of years ago, there was a great crash of 07, 08. Every single one of those financial crises was billed as once in a century type of a disaster, except it happens every 3 years. So, you know, will the future be any different? I don't know. I don't know. But every time it goes against you, there is a good chance you would lose, you know, let's say your net worth and the values of your security really goes down 50%. And what do you do with that? This is really where the insight comparison, but also this is where the temperament comparison. In a sense, you have to really have a certain confidence in your own judgment and not be swayed by other people's views. And this is what I would call an adult way of making money. It's not that easy. It's not. It will cause agony. It will certainly cause stress. But that's life. There's nothing you can do about it. It's just given. And then virtually every businesses really have that. You know, Berkshire really had at least 2-3 times the stock went down 50%. That happened to Carnegie too. That happened to Rockefeller. It happened to everybody. It just is simply a adult way of becoming rich. There's no other way to explain it. Now, on the other hand, if you made a mistake, well, that thing could really stop. It wouldn't really stop at 50. It would go all the way to 0. As we have seen, a lot of those crashes, they really destroy lots of businesses. It is a brutal game. Even great companies, almighty companies. If you take an example of, say, the top 50 companies in America, and you look at them every 50 years, I mean, every 10 years. So you started with 100 years ago, you go after 10 years. By the time you sort of reach to be 20, 30, 40 years, you probably left, I would say, take a word, 2/3 of it gone. By the time it goes to 100, maybe a couple left. It's just the way it is. But once almighty company, General Motors, who make almost all the profit, you know what happened to it. Railroad, airlines, you name all of it. So that's why I'm saying that investment is a continuous learning process. Virtually everything that is into impacting and affecting an investment decision never stop. They always change. But that's really what charms it, and what is interesting about this game. At least I personally find it fascinating. And to see, to study all the great issues, and occasionally develop a couple of insights. So for those of you who have the start, who have the curiosity, who also have the temperament, this game, you couldn't really have a better game than that. Now you can argue whether it's fair or not fair, whether the society should reward teachers and firefighters better than doctors, better than the capital allocator. I don't know. But the way that a capitalism is organized, it does really reward people who have a better sense about where to deploy capital to really further improve the efficiency of the overall economy. It may be fair, it may not be fair, but that's the way it is. So if you really have the aptitude temperament for the game. It is the greatest game there. But if you're not, the other thing I would really strongly encourage you to think about is don't become a nuisance. Don't become a harmful to society. And that's essentially what happened in Wall Street. Over the last 20 years, that was a repeated financial engineer. They didn't really produce any real wealth. They just really allocated it from, transferred it from one pocket to the other. If you add all the different financial engineers together, it probably is amount to essentially a casino type of operation. Now, there's nothing against fundamentally casino. I'm sure a small little bit of it, is a game. Some people enjoy it. But if you allowed it to be much bigger part of the economy, it's just like drugs and alcohol, you would destroy the very fabrics of the society. And if you think about the economy, 20-30% is a casino, and then alcohol and drugs. None of them really produce fundamental wealth. They just transfer from one to the other. In the end, you're going to destroy both the people who really got the better end and also the one and losing end. It is just really fundamentally harmful if you allow it to be too big a percentage. And that's what I think essentially what happened with financial engineering on Wall Street over the last several decades, progressively getting worse and worse. And so all of you probably would end up somehow in one capacity or the other, end up in something related to business, and some of them probably related to finance. I think the least that people can do is to avoid being harmful, avoid being confused, resisting the temptation to use all this garbage. I mean, to call them garbage obviously is an insult to garbage. It's pretty bad. And so that's, if we could do that, I would say that Bruce has done a wonderful job of educating this great class of people. So, which I have no doubt he has done that. Now, so with that, I'm just open to any questions, whatever things like
Okay, I made him submit questions first. So can we start with those and then we'll throw it open? Laurent Vasilescu.
Who's that?
Sometimes they submit these questions and then don't bother to show up in class. Okay, I will read it. Okay, Manish Prabhai recently spoke to our class and talked about his reluctance in investing in China due to the multiple set of accounting books held by Chinese corporations. How do you reconcile this issue with regards to your investments in China?
Well, I think he's right. Manish is a very, very bright and capable investor. And I think he's right. Every time you really relate to a situation with multiple votes, you've got to be careful. But everything has exceptions. And you won't really analyze any particular company to say whether they really kicked the several votes. Just because, your next door neighbor kicked multiple votes, it doesn't mean you are. So there are always exceptions. But that is really a good issue to start with, to see whether you can trust the accounting, whether you can trust the integrity of the people who manage the company, which really over time has a huge impact on the overall performance of the businesses. And if you really invest in the long haul, I would suggest that that's a very, very important question to consider.
How do you deal with it?
Was that?
Did you just not invest?
I just got not really investing.
So
that's one of the problems really killing some of the Chinese businesses is corruption. I just, as a rule, we just do not really want to profit ever from corruption. I don't want to ever invest in anything to do with corruption. And so the thing is, as I said, there's tens of thousands of securities. This is the wonderful thing about being an investor. You don't have to be invested in any of them. You just have to pick a field that you feel really do not have a several set of votes. That the people are trustable, high grade, high moral people. And if you find those people, you go with them.
Okay, Letitia Beppu.
Now, So my question was, my understanding is that you started a venture capital fund years ago. So my question was related to that, why you decided to go into venture capital, and from your experience, what is different in terms of investment strategy and challenges that it faces?
Yeah. Well, I always have this bent that I really want to build a real business. So sometimes really just investing in securities is not enough. And so I started a venture, and it was a lot of fun to really build a business from nothing into great successes. We have our shares of the fund. We have several businesses that all really go to be valuable businesses. We sold them hundreds of millions of dollars. But overall, it is a tougher game relative to public securities, because you really have to involve in the day-to-day operation, and it is not that easy to really build great businesses. There are not that many. In every generation, there may be a handful of great companies that come from nowhere and come to dominate their field. And so, it is much more rewarding, obviously, as an investor, to really pick them from the public market and have a broader selection, et cetera. And also, you're more likely to find managers much more capable than yourself. That certainly is my humbling experience. A lot of being venture capitalists, the things I find is I'm really not that good at. And I find far more capable managers in a lot of the publicly traded companies. At least you have a broader selection of, say, 100,000 securities worldwide. Chances are, it's a lot better than the 10, 20 you're capable physically to manage from a venture perspective. And so, did I really get anything out of it? Absolutely. I've learned a lot. I've learned a lot about how to make business succeed and how business fails. And so it really is it was just a lot of fun. And so I probably carried it too far, my own recommendation of all of you to really sort of view business as something that we inherited from an unknown relative to you, and then you will study. So I went one step further, actually. I went to run it. And actually, I did run one of the businesses, which is, of course, a mistake. Yes.
Okay, Seth, do you plan this?
Yes. So I've read that when you're looking at an industry, you consider sort of the most miserable failures of the industry, and if those miserable failures are sort of okay, that might be a viable industry for you to invest in. Can you talk a little bit about that process?
Well, it's interesting that mostly I want to really start to go back to really understand the business. Once you have that experiences, you probably can extend it to really try to understand the characteristics of a certain industry. Not always the case, but it is normally the case that certain industries have a characteristic and historical reasons that behave differently from other industries. Every industry is slightly different reasons, but it turned to be that certain industries really have better prospects than the others. And so the way you want to really understand it is to really find the best of the players in that industry and the worst of the players in this industry, and to see how do they perform over time. And if the worst players in the industry really perform reasonably well relative to the best of players in other industries, it tells you something about the characteristics of this industry. And that not always the case, but often that's the case. Certain industries are just fundamentally better. And every industry is better for slightly different reasons. So when I come back to this, look, if you really acquire the skill of analyzing the company inside and out, eventually you'll be able to extend that skill set to analyze the industry inside and out. And when you begin to have that insight, that is also enormously beneficial. That's where you want to concentrate. If you can concentrate it on the industries with superior economics, with business with superior economics, and management with just better management and trustworthy management, And if you get them in the right price, the chances are you can stay for a long, long time. Paid.
Sorry. I was wondering, could you give an example of an industry
Well,
you
anybody
approach to a particular?
I studied over the years in the industry. So
Okay, you talk about-
anybody that's from the industry can talk about it.
Anybody want to pick an industry out there?
But I would assume, look, this is what I said earlier. Don't copy other people's insights.
I was going to say automobiles.
Yeah, that's right. Don't copy other people's insight, because it doesn't work. An automobile is a great example. Automobiles, the characteristic changes. It's really amazing. If you look at the early days of automobile, it started with several hundred players, and eventually it's concentrated down to 3 or 4. And those were dominant, really enormously profitable. And then over time, they become miserable players. And then, but then you see there's a whole life cycle to start all over again in a different country, such as China, India. Everything that really has a reason. If you really look at it, it will be a fascinating study. To look at, for example, the General Motors from the early days of founding, look at them every 5 years to see how the performance metrics changes. Take an example, use a value line kind of a format. I would strongly encourage maybe the Greenwald Center should really do something like that. And to really collect all the data, to go all the way, and provide us some useful commentaries every 5 years.
You want me to give you that data? Because I can't.
Oh, good.
Through the 1960s, their return on capital was 46%.
Yeah.
In the 1970s, their return on capital was 28%. In the 1980s, their return on capital is 9%. In the 1990s, it's 6%. You want to guess how negative it is?
So that's really fascinating. If you really have those data put into the data bank, and you really give a commentary of just say what happened every 5 years. The amount of insight that would yield if it's a simple study is astonishing. It's astonishing. So to just as simply say the conventional wisdom, well, auto is not a good business. I mean, people lose money, all of them bankrupt. That's just not true. Or you just say, well, those guys are just really unbelievable. Money machines. And that's also not true. So, but if you are able to really comment, or able to really observe the key element to make that statistic the way that Bruce really laid out every period of time, you would have learned so much. You would have learned so much by that simple process. And so, with that experience, as you look at, say, a new market such as China or India, and you would just say, ask yourself, where we are now? What really made General Motors so successful right now? And what really made a particular company more successful? It turns out every company is different. Every company is different. So are you going to be one of the 100 companies that will disappear, or one of the 3 that survive? Or you will be concentrated in the 3? Why not a 6, 10? Everything really has a specific reason that is unique to the situation. And so to get as broader a historical background as you possibly can in an accurate way, give you an enormous advantage in analyzing the new situation. And that's really what turns me on as an investor. I get fascinated by those questions. And we need to be able to correctly predict what will happen. Also feel that just tremendous economic benefit. To have that knowledge, to have that insight before it happens, it gives you a giant leg up as an investor.
Lawrence, I'm good.
That's me. So I wanted to ask you actually about your investment in BYD. And so I was wondering, I have read that you had stressed the importance of them introducing a car to the U.S. market soon. And I was wondering why you think this is so important and what advantages you see a BYD car having as compared to a domestic producer of hybrid vehicles in the longer term.
Yeah. Well, that's an interesting question. I think it's better to ask the chairman of BYD than myself. Well, Well, if you're just talking about electric vehicles, not the conventional vehicles, the key, the heart and soul of the new electric vehicle age is the batteries. They're basically three parts that drives the electric vehicle. It's the battery, the electric motor, and the electric control panel. It really controls the field, all the different elements that goes with the driving. But the whole powertrain is essentially those three elements. The electric motor has been there for 100 years. And the control system is essentially a software that can be improved over time. But essentially really can be. But the battery is really where you get the biggest differentiation. And the battery is really what turned the balance towards electric vehicles. And about 100 years ago, before the Model T was introduced, the competition between electric vehicles and gasoline was really as obvious. A two-person change in the game, one is John Kennedy, one is Henry Ford. Rockefeller really kind of sort of made this resources that is just God-given. And it's so cheap, and so powerful, and it's so abundant, and it's so easy to extract. I mean, in the way you use it to burn waste of 85%, it's still okay. The way the combustion engine works really wastes about 85% of the energy, and in an unrecyclable way. But it still works, the economics. And then Henry Ford was able to put a car and put an engine, and they just really make it cheap enough for everybody to afford this sort of start of a new era of automobile. And that's really what you find in the winner, in a sense. Up until then, battery-based cars was about at least 1/3 to 1/2 of all the cars being produced everywhere. And so when the oil really just was organized that way, the battery just simply can't compete. Now what happened for 100 years later is, what you all know, about to run out of oil, or at some point it will run out of oil. And the way we burn that oil, obviously, A, is wasteful because it's non-recurring. B, that it will contribute to the global warming. It continues at some point, but it could probably everybody here. It's not that we're destroying the planet. People say, oh, we got to protect it. But the planet will be fine here. The planet has existed for 8 billion years. We'll have another 2 billion years left. But what will happen is that all the human beings and all the other species may not be there. And over the 3 billion years, what is the lifetime of our modern human? Maybe 30,000 years. At least we have 10,000 years of recorded history. That's a tiny, tiny bit of the history of the mother planet. So could we really do something, put our economy and our destiny into a path of suicide? Well, it looks that way. We're going in that direction. And so we got to do something to reverse that one. And so all sorts of reasons. And meanwhile, the development of the battery continues throughout those 100 years to the point that in terms of performance and prices are the most important metrics. They actually, the combination of them is comparable and on the path of becoming better. The performance inherently is a little bit better because the ease of the use of efficiency should reverse. It's about 85% that will be used and 50% will be probably wasted because of the transmission from electricity to moving power. It's a lot more efficient. And B, the time lag in between is almost non-existent. We always debated, the faster car is, okay, so from 0 to 60 miles, 10 seconds. And then it goes 8 seconds. Or the best ones go to 3 seconds. How about pay $500,000 for that? That's really what people do. It's just like, in the age of the mechanical watches. And everybody in Switzerland is really so proud to announce how accurate the watches are. Well, with the advent of the electric watch, what happened is that every watch is really as precisely accurate as anyone else. So all of that, there is no point of that competition. It's the same thing with the transmission. The speed is almost instantaneous. So So you can really find the right, tire that can really take that. You can really 0 to 60 miles in 2 seconds. It wouldn't really, and then the maneuverability, the torque power is enormous because it is instantaneous. This is without a lack of time. So the performance eventually will be better if you have the power density and if you can really drive down the prices. And so now the development, with the help of a company such as BYD, is now at the point that balance is about to tilt. It shouldn't tilt because we don't want to all get killed eventually. It will also begin to tilt because everybody is thinking it is a better performing car. And so we're really right around that edge. So whether that product will be, will be desirable in China, sure. In the U.S., of course. And it will be desirable everywhere. So, eventually if you have a car that can really do all of that, obviously that it will be so everywhere.
But how about the relative competitive performance of BYD and other people in the industry, notably in the United States?
Well,
Is that
I think the marketplace would really determine that.
Yeah, but why do you believe in BYD? I noticed you're not.
Well, because I also study all together.
They want to describe that process?
My answer is we will see. We will see by the time that the winners emerge. You wouldn't know whether they're right or wrong.
But
Really, there's
what-
no point to say whether they're right or wrong. I'm voters by the feet.
No, no, no,
I own and obviously I have a view on that.
But what did you look at to reach that view?
Yeah.
BYD
Here it is.
versus the other.
Okay, so here's a simple factor. There's a lot of people, over 100 years of master of making very difficult cars. And the technology by this point of making traditional cars has matured to the point that it can be learned and perfected in relatively short period of time. There's still learning curve, no question about that. The electric vehicle obviously is completely different. And the heart and soul really is the powertrain and the batteries. And that is, we're really still seeing a kind of, we're still on the curve of a continuous, rapid improvement. And whoever really leading that charge obviously would have an advantage. There are some battery manufacturers and there's some car manufacturers, but there's only one company or world that really is a leader in the battery manufacturing, but also is a rising leader in the automobile manufacturing. There's only one such company. And in order to really put this together, just like in the old days, you really, to be a Ford, you have to really know how to build an engine and transmission. Because that's really the heart and soul. You can't imagine being a big automobile company with the ability and expertise to produce, engines and transmission and a powertrain. And so far at least, those two elements must be able to work together. And there's a lot goes into it. It's not an easy process. And so far there's only one company doing that. I'm sure eventually that the makers of electric vehicles will also be makers of simultaneously both batteries as well as automobiles.
Lawrence, are you happy? All right, Kevin, since we're on BYD, Kelvin, go.
Yep, here. So you bought into BYD in 2005, and a few years later, you brought Berkshire into that as well. I saw on the website that you sold a small portion of your BYD shares at the end of last year. Was it just rebalancing, or just can I get your thoughts on that?
Well, actually, I started BYD sort of in 2002. It was a long time ago. We sold a small amount of shares because we also had a little bit of emergency redemption at the end of the year. So I used to give some cash to investors. It's a small portion of the redemption. Guys like Bruce and stay with it. You're not redeeming, are you? So what we do have some people who really have some emergency need at the end of the year, if they need to keep a bit, we'll have to sell. Oh, you're really doing work.
Okay, you had a second part to your question, Sheldon?
Yes, I did. We read your profile online. It's available. So I'm just wondering, do you have any problems when you try to invest in China? For example, perhaps not being able to go and meet management and all that?
Well, it's interesting. Yeah, you do have some difficulty, but you have to say, well, by the way, do I supposed to wear this or not?
Is anybody having any difficulty hearing in the back? No, I think you're fine.
Oh, I just realized I'm supposed to do this. Yeah. Anyway, well, I did not really see a faction plan at BYD until probably 2008, end of 2008. I did not really have, there's only one faction, I did not really have a better sense of the overall faction until the end of the year. I've been an investor since 2002. And Berkshire made investments. Buffett and Munger made investments without, of course, ever seeing the operation of BYD, or never met with Mr. Long Shan-Tu, the chairman and founder. So that really is cause to the question, what do you consider knowing enough to make an investment? As I said, investment, it really is you have to really work with imperfect information because it is about predicting the future. So what would be constitute a necessary, have to read investment? But I didn't really sort of get a chance because of the problem you mentioned. Until much later. It didn't really stop me from making the investment. And of course, until today, Berkshire haven't really seen the plans. And nor actually at that point, you hear them met this Long Shan-Tu. I didn't put them together until probably 2009. But it hasn't really stopped them making the decision. So there is a point that, if you have enough of a margin of safety, but that's why I keep coming back to the really elementary importance of this concept of margin of safety. If you have a margin of safety going into a situation, you can allow a whole bunch of uncertainties. You can allow a certain amount of unknowns because it's really part of the game. And it will never go away. It will never go away. And so the answer to your question is, does that really stop me from making the investment? No.
There's one last question on BYD since it's due it. Jared Gould?
Can I sort of change it around a little bit?
Yeah, of course.
So I've done some research on lithium-ion batteries, and from what I can tell, so BYD has a cost advantage by manufacturing consumer batteries manually, right? And for automotive applications, the process is way more complex. So, it's not clear to me that sort of consumer batteries plus cars equals electric vehicles. And so, I guess when I looked at the stock, and maybe when Buffett bought, it seemed like maybe he was paying less than fair value, and he's getting a free option for electric vehicles, and it seemed like a good deal. But today, it seems like it's this dream of electric vehicles is like fully priced in. It doesn't feel like a good value investor stock. Right? I mean, the expectations are huge. So, why would you still own it today?
Well, that's interesting. One of the most fascinating things of being an investor is you always have surprises because it's really part of the game. And you always sort of dealt with a mixture of good surprises and bad surprises. When you really get into a situation, the way I got it with BYD is I was very happy to have lots of good surprises along the way. Chun Fu and his team and this company BYD really had a fabulous culture of continuous improvement. something that people really thought they knew. It was already a few years late. Now, there was a study, there was a book written about how we initially got into the battery manufacturing of the small batteries, small applications, like power tools. Well, he did that way because he had no money. I mean, he only had $300,000 of venture capital. That's all the money there is before they went to IPO. I mean, how many companies do you see that's really on $300,000, really went to IPO and maybe raised $100 million, and well, they gave it $200 million, and then with that one, you know, so now they have, what, 160,000 employees, $6-7 billion a year, maybe $500 million to the net profit. I mean, it's amazing. It's a really tremendous story. So he really has this ability to adapt, to fit in the competitive environment, and also fit in this environment. To really maneuver himself to be on top of his competitors. He has demonstrated that ability again and again and again. When he doesn't have the money, he uses many. But when he has money, when he really is building a battery that consistency is of paramount importance, then all of a sudden automation is introduced. And the way he do automation is far cheaper than any other way other people do it, and far more reliable in the end and consistent. So that it really is accumulated all those years that we studied, now almost 10 years. It just continuously surprise people with this ability and ingenuity to really to take a situation, take a given hand that he's dealt with, and to figure out ways to do it better than any other people that I know. And so don't, whenever you see a study, chances are it's too late. It's already outdated. What it's currently doing is very, very different from what is being according to study. So I guess probably at the end of the day, you would, another 20 years, looking back, as we really analyze what happens, how we did it. So how do you really, with that imperfect information, understand the company? Well, I suggest one way to look at it is to see what he has accomplished. 8 years ago, I had no idea we were going to be in the electric car business. Absolutely no idea. Well, I don't even know we're going to really go into the laptop business or cell phone business. None of those businesses. I don't even know we're going to go into the lithium ion for cell phones. Those are all really invented along the way, and there's still multiple businesses coming along. And so to think that this is it is really overlooking the history that he has demonstrated. And so that's why I said, look, this investment is not easy to understand. It is not easy because it's changing so fast. It's changing at such a large scale, almost unheard of at the scale that it happens. And we got now 110 million square foot of manufacturing capacity in a facility. That will double in about 2 years, 200 million square foot. Now when I first studied the company, we had a few thousand people. Now we're 160,000 people. And this year we're going to hire 10,000 college graduates, maybe 8,000 and 9,000 engineers. The scale of it, and the speed that it's attempted, the things they're getting into, is almost unparalleled in all the companies. So this is why I think the study of history of all the great corporations will give you a very, very good insight when you predict a fast-growing businesses such as BYD. And if we started with GM, I would strongly suggest we should see the top 100 company that somehow survived 100 years through adaptation. And look at them every 5-10 years. There will be enormous amount of insights that you will learn from it. And studying General Motors will be enormously helpful to understand BYD, at least one aspect of BYD business. And of course, they have all sorts of other businesses too.
Okay, Bobby Jornis.
Yeah, so we've got a lot of investors who come in and basically they say that, basically talking to management is, at least in their opinion, sort of a waste of time because they're primed to say what you want them to say, and especially if you're already long in the position, you're much more inclined to kind of hear what you want to hear. So obviously it doesn't sound like you subscribe to that opinion, but I guess what do you make of that? And also, are you generally more willing to pay somewhat of a premium for kind of a business that's that has a moat, or are you kind of agnostic and you're just looking for businesses that are mispriced for whatever reason, regardless of sort of class?
Well, there is no general rule. All the things we're talking about can be applied differently in different situations. As I said, the key of making the investment is really to know what you know and know what you don't know. You can make a decision based on all the other elements without knowing anything about the company. I mean, about the management. Without meeting them, at least, you know something about what they do in the past, obviously. Such as, when Berkshire made an investment in BYD, or when I made an investment about visiting the past. Every situation is slightly different. So I come back to the point is, do you know enough of other things that really make you feel there is a margin of safety? And the way to really understand is to truly know what you know and know what you don't know. And then correctly really assess all of it. Now, obviously, the more you know, the more beneficial it is. Now, even when you meet the management, it doesn't really mean you learn something. You may or may not, as you just correctly point out. And obviously, that is a process. It's just not one meeting. And obviously, action speaks louder. So you want to say what they have done. So, every situation is slightly different. But everything being equal, the more you know about the management team, the more honest and upright they are, and the more motive they have, over the other ones, the better the situation is, and the deeper the discount. So you have to balance all of those together to make the real investment decisions. So you can't really just draw the general conclusions. You just have to analyze each situation individually. But the key of analyzing the end before you make that decision is you have to ask yourself, do I really know what I think I know? And do I really know what I don't know? If you can answer those questions, you can make easy decisions, logical, commonsensical. But if you can't answer that question, the chances are you'll gamble somewhat. And that usually comes to bite you.
What kind of preparation do you do before you go talk to a manager?
Well, I don't really necessarily have a set of preparation per se, because I have an insatiable curiosity about the business and I want to invest it in. The chances are I know a lot and about the businesses, about the industries, about everything else. And so, you're prepared, but not being prepared in a sense. So if you're really curious about the situation, you just want to know more. You just will study more. And so I don't have a set of things that prepare for one thing. That typically is happens that when you're working in a hedge fund or mutual fund, you're expected to understand the business within 1 week. And a part of that 1 week is the management team. You have to prepare a certain thing. You can never understand something in 1 week. You can't understand something in a month. I mean, it took me 10 years. I'm still learning about what's new in BYD. It is a continuous learning process. To say that there is a kind of listing to go through and again you would understand, that may not be the case. On the other hand, you spend a lifetime studying something, in business, the industry that I have lots of knowledge. I can tell you within a few seconds whether I like it or don't like it. The chances are I already know it. And so you just want to build that knowledge base over a lifetime of continuous learning and be brutally honest and rational with all of that aspect of that. And that in the end, so you just sort of know what you want to pass on. That is the preparation. I think in the end, there's no set of preparations. Yes.
Matthew Ring?
Yes. Recently, Jim Chanos came to Columbia Business School and gave us the China syndrome pitch, just indicating there's a large global forming in the real estate and industrial sector in China. Let me get your audience who's seen the pitch, just kind of your thoughts on it.
Well, I was saying it, and I have really no opinion about it. It's too big a question for me to understand.
Okay. And here, is Injit Cho here? You got 3 questions. You want to, the one you wrote in, I got in heading, is 3.
Okay. Like 20 years ago, you said you challenged the conventional wisdom in China, and okay, out of curiosity, so in terms of value investing, what do you challenge the conventional value investing method or
I don't quite understand. So do I?
Oh, I think what he's saying
Yes.
Is you have a history,
Yes.
and you stress going in your own direction.
Yeah.
And you decided you were right, and 60 million members of the Chinese Communist Party were wrong. 1989. Is there any particular areas in which you think you do things differently than the conventional value approach to investing?
Well, the fundamental
Is that
philosophy
Yeah.
of value investing is very sound. I have really no argument with it. It basically says that, as I said, it basically says 3 things. That stock is a piece of ownership. That any situation, because it's inherently unpredictable, you want to go into a situation of margin and safety. In a sense, in other words, you want to have a margin, just in case you were wrong, or if you're right, you get a better return. And then you want to really be independent from what other people are thinking and not be influenced by Mr. Market. That is a really intelligent approach. And so therefore, almost every intelligent investing is a value investing. And value investing also boils down to being very rational and honest. There's a certain intellectual honesty. It boils down to not only what you know, but mostly know what you don't know. And if you have all that insight going into the businesses, but I don't have any argument with it. I'm not really kind of against, just for the sake of opposition. I believe in this fundamentally intelligent approach.
Okay, do you want to ask the last part of the question?
No, I think that's it.
Okay, I'll do it. Was there a special reason for you to change your hedge fund to long only in 2004? What's your point of view about long and short positions in value investing? Are both equally worthwhile?
Yeah. Well, the most profitable kind of investment is really a long-term investment. You really don't know how long it would take for people to really come to a rational consensus, for a good situation to be recognized as such. So you really want to allow the time that it might take. And B, that if you find a good situation, it's a wonderful business, running by trustworthy, capable management, with industry fundamentals goes behind it. So the wind behind it. You really want to really take the right, because you're not going to find a lots of situation like that. And doing so, you would also avoid paying taxes. If you really do it in the short term, there's a 40% punishment. So that added to another few percentage over time. It is just like borrowing from the U.S. government and your local government, interest-free, without a recourse. So that's a really built-in leverage. Why not? So when you find a situation like you want to go long-term, now, short fundamentally can't be a long-term proposition. There's 3 things that really fundamentally against long-term thinking and shorting stock. A, in the long game, your upside is your downside 100%, and your upside is unlimited. Well, the short is the opposite. Your upside is 100%, your downside is unlimited. And B, shorting is essentially a form of borrowing. And so you really want to make sure that you got enough money and enough time, because you could be totally right. But if the timing is not really on your side, you could really be bankrupt before you prove you're right. And so that's a really, really very dangerous position. And because the best kind of a short usually have some kind of fraud element to it. This is the kind of things that would go to 100%. Those kind of, if the management is determined to be fraudulent, they are really determined. That fraud can last for a long time. You take a Bernie Madoff, how long? Was it 20 years? I mean, boy, you can't really kind of borrow money and say the position against you for 20 years. Will be ruined. And so for all those reasons, shorting is a short-term game. You have to watch it all the time to see if the position is against you. Because when they really begin to against you, they really build up a huge leverage on you. It could utterly crush you. And so by really employing a long short, which in theory is okay, you have to be trading all the time. If you're trading all the time, you have to really be tuned to all those idiosyncratic reasons that really move the market. None of them really have any fundamental applications. It's just people decide that information is good enough to go up or go down. It's a voting thing. You never know. You can't guess. So you spend all your time chasing all those noises. You never really have time to have peace of mind to truly study the long-term situation. And if you can't really concentrate in a prolonged period of time and sustain the study, the chances of you developing a truly unique insight is non-existent. You can't. It's not that easy to develop a truly great insight, and other people don't. It requires an enormous amount of dedication and study and long-term accumulation of knowledge. And if you spend all your time really kind of guessing how the market is going to do and trading your short positions, you won't really have time to do that. And besides this whole proposition that you would always rise in value no matter what happened to the market is fundamentally a flawed proposition. It just can't really be done in any rationally justifiable way. So to be an investor, you just have to accept it as a adult way of making money by losing some, at least on paper, from time to time. That's just a matured way of dealing with this whole game. It's part of the game. And this is why that I closed the long short and really focusing on it. It was a mistake going into the long. You know, I went through this three basic bubbles. You know, three financial crises. The Asian financial crisis, the internet bubble first, and into the great crash. Well, in the middle one, I did the long short, so we didn't really lose much on the paper. We actually made some paper. But the biggest mistake I made in my entire investment career, for the 13 years of me running the fund, those were the 3 years prior to the fund, on my own account. If I look back, the biggest mistake is not the kind of the money that I lost by making a mistake in investment. I certainly have plenty of those, like everybody else. The biggest mistake is not to be able to pick up the companies that I didn't know. I have a unique insight. I know I can make a lot of money because of this long-short thing, this industry perspective. And the amount of money I was not able to make is still adding up. Yeah, this is a tricky concept. I know. Is the money left on the table that is still adding up. That, looking back, that was the biggest mistake in my professional career. And yet, on paper, we did really splendidly over from 2000 to 2001 to any money, we sort of make money every year. That's just not the way. You don't really want to go into the business with some mediocre things. So you might as well buy an index fund if you want to do that.
Alexander Petrovus Hexner. He specializes in that. Sorry, Scott. I was hoping to meet him. That's got reasonably good questions, though. In a bull market environment, how often do you reevaluate your investment thesis? Do you methodically sell at your projected target price, or unconsciously try and ride the bubble as long as possible? What's your sell discipline?
I don't really ever want to profit from a bubble. I don't ever want to really sort of, I know Soros does that, and that's just not my game. I don't profess any ability to understand how long this crowd is going to be continuing to use a certain theme. I invest in things that I felt that continue to provide me with compelling value. As long as that continues, this will continue. But if I not selling, you obviously express a view about the future at this valuation going forward. You're really making that vote every time. And so that's why that I said that this game is a really continuous learning process, because everything that affects the correct investment decision is constantly changing, including the price, including the prospects, including the various elements that make you successful and really make you prone to fail. At any given time, even the mightiest of companies could really fail. That's what happens historically to all the great companies, at least to the great majority of those great companies. And so you really do want to, you should never ever stop learning. So this is why this game looks to be easy. It's not that easy. It is a lifelong learning process. And by holding that at any given time, you always express view. And so the selling disciplines are very simple. When you no longer have the valuation from the price holding on, you really take into consideration what you think might happen in the future. Well, you do sell. You do sell. No, I have done plenty of selling.
Okay, Ann Chung. Okay, I can read you. All right, given your focus on international investments, how do you think about diversifying investments regionally, and what do you do about currencies?
Well, first of all, I did not really specialize in international investment. I started my fund investing predominantly in North America. When I can find the lost values in North America. When I was a student sitting where you are, I did most of my investment in the United States and some in Canada. In recent years, I just find better bargains outside. The wonderful things about being an investor in a publicly traded market is you can really go anywhere by the world. No matter what happens overall in the overall macroeconomics, you always find a pocket of very interesting opportunities. And this is really enormous. There's no small advantage. You cannot have that advantage, for example, being a venture capitalist, as as I experienced it painfully myself. But being a public investor, we can look at all over the world to find opportunities that really appeals to you. So I don't really necessarily address particular concerns in terms of regional views. I do have a view of certain regions and certain currencies, but I like that view to be a part of the thought. In other words, you want that view to be in the back of the mind, not in the head of it. But you don't really want that one to be a driving force to a particular investment, because that wouldn't work. You can really have all the macroeconomics right if you get the fundamental things about a particular business problem. It's all toast. But if you have your fundamental things right, economics, even when you have a loss of a headlines, great company just to sail through. And if you happen to have those macroeconomics factors behind you, boy, you really can ride a great wave. that happens. That do happen.
Okay, Carolyn Lundberg Hart.
So I guess, generally speaking, how would you say your investment style is different today than it was from when you founded the firm?
Can you tell me one more time? Is that
Oh, sure. Generally speaking,
Yeah.
how would you say your investment style today is different from when you first founded the firm?
And what are the key lessons you
Well,
learned?
a lot of things have changed. I think that's a good thing about this profession. One bonus is that you get better over time. Most of the professions, as you get older, you sort of begin to be out of the game. Take an example of competitive sports. If you're a figure skater, or a gymnastic, if you're no longer a teenager, you're out of the game. If you're a competitive golfer, by the time you get 40, you lost it. And in most of the professions, you have that kind of element to it. In investment, if you're doing it in the correct way, in a fundamentally sound way, you get better over time. And your knowledge you really accumulate exponentially. And not just in really linearly, it really does accumulate exponentially. When I look back at all the things I made, all the decision making, I would probably have done slightly different on all of it because I'm better today. Another 10 years, 20 years from now, I'm looking back at the decision I'm making today. The odds are that I would probably do slightly different and better. So if you really approach it in a fundamentally sound way, the upshot of being this investor is it takes a long time on this learning curve. But as you really mature, you just become better and better and better. And that process of progression is really just like a compounding of money. In fact, it compound at a faster rate than you compound money with. It's often really in the sense of exponential because every period of time when I look back and see that I find some blind spot, I find that I always get far, far better. So if you truly love this game, I would suggest you don't take the shortcut. Don't go with the Wall Street commission way. Do it in a fundamentally correct way. It might take some longer, but in the end, the reward is much richer. So as Buffett always says, you don't want to be short-term greedy, but you can be long-term greedy. And it always works better.
Okay, this is the last one from the list. Is Matthew Rilling here? Matthew? I'm not going to, I was going to make him read this, but, okay. What is the difference between being considered one of the top criminals in China and being a hedge fund manager in the U.S. during 2008,
Why 2008 and 2009?
Which is higher stress?
I don't really. Well, first of all, I don't consider myself a criminal. Start with that. I don't think China considers me a criminal either. So it is a historical event, and it has. Time moves on. I think that I haven't moved on. China hasn't moved on. So listen, I don't see that there's any contradiction whatsoever. What we're doing today, food investment, a company like BYD, is really gracefully help China march into this modernization, which is no different from what I did back in my youthful days of being a student protest, as a student activist. The goal and the dream is exactly the same. We want to see China prosperous. We want to try to go into a modern era. We want to push the reform. We want to really enrich every citizens. And of course, to be in this country for the last 21 years, I also want to see this country continue to prosper. And with China and the U.S. to really work in a very constructive, mutually beneficial way. And so a company such as BYD is really providing a solution for both China and the United States and for the broader human civilization to really to migrate from the path of almost suicide into a path of more sustainable development. And if you think about it, that eventually we're going to have to really migrate away from that carbon-based, fossil fuel-based economy. It's simply not sustainable. It's simply not sustainable. The amount of oil and gas underground is finite. They're not going to be reproduced. And the way we use that is not recyclable. So eventually they will all burn out. And we actually needed that stuff underground because they're really very useful. A certain aspect of that usage is vital from agriculture or a petrochemical product that is, by the way, recyclable. So we have to really develop a better strategy so that the economy can continue beyond the next few hundred years. And also the fact that CO2 is really causing this huge issue of warming. And eventually will cook up the planet and all the major species, primarily among human beings. That's a really a vital concern to every human being. So the fact is that China now is leading companies such as BYD in providing that solution is a great contribution to everybody. If you look at the last 150 years, virtually everything that is important and really made it the basic foundations of modern-day civilization are done and invented or enriched and perfected by U.S. corporations. Electricity, light bulb, television, telephones, cell phones, internet, automobile, railroad, airplane, name it, all of it, home electronics. So the American has really had a great history. And all of a sudden, I think now is the rise of China. Here is one company in China that is really about to make a major contribution to the vital element of human civilization in the area of cheap solar power, of electric storage and electric vehicles. All of those will become the foundation of the new fossil-free, carbon-free economy. Ultimately, we have to get our energy from the sun. 1% of the area on the land mass will be really plenty to really produce the entire energy that the Earth planet needed. This is how much. And most of the energy also comes from the sun anyway, even the fossil fuel. Come from plants and animals and buried underground and turning into fossil fuel. So they all originally come from the sun. So if you can figure out a way of directly taking the energy from sun and make it into electricity and use electricity to power vehicles, and also to use batteries to really store this electricity. Those are really the key, because up until now, we have not been able to find cost-effective ways to store electrons. And this is one of the problems. And we have plenty of sun, and plenty of wind. But they don't really always shine, and they don't always blow. They don't really always shine and blow at the time you need them. So the intermittency issue really makes it a small, tiny percentage of total electricity. In the United States together, at this point, only about 2.5% of the electricity generation comes from renewables, solar, thermal, geothermal, and wind. But if you can figure out a way of cheaply storing electrons through large utility-grade batteries, you can really harness the sun. And you can also, if you can also figure out a cheaper way of converting solar sun into electric power, the combination of that one would really make the renewables eventually to be, say, 50, 60, 70, 80, 90%, eventually all of it. And if you have that as storage capability that is reliable and cheap, and it can replace withstood the abusive usage of driving, then you can really power all the automobiles and vehicles and all the transportation with electricity as well. So the combination of those three things really hold the key of a new industrial civilization. And we're about to embark. And this is really where the power is. To think that, obviously they didn't really start it out by really sort of, saying we're going to be in the battery because we want to do this. It just happened that way. But again, most of the great companies really happens, it looks logical only in retrospect. I'm sure Bill Gates really didn't start it out. Microsoft had dominated the entire PC. The PC didn't even exist. It was just trying to make a buck on something that is coming. But it turns out this whole transformation from a carbon-based economy to a carbon-free economy, the key to that transition is a cheap and reliable way to store electricity. And that is the battery. So this is why it is so interesting to see that now we begin to see positive contributions from China to Chinese and the U.S. economy and broader civilization. And so I could not be happier.
Really, thank you very much.
By the way, I know some of you are going to ask me for a name card. I gave a talk to law school before here, so I gave out all my cards. So what I'll do is I'll write down my email and my telephone number. For those of you who want to be in touch, just feel free to do so. Okay, I'm going to write right here.
Yeah. That's the rich
No, you're going to be disappointed.
You only get half.
Oh, wonderful. Oh, good. Oh, yeah. I haven't missed one in many years. Oh, God. 20 years.
Now that's
They got them to give me like 3 months off and like keep it at the same So yeah, and I also did the same thing with one of those reserves. I'm gonna see if I have it. They were taking
I have a really strong. I mean, I don't know. So that's all in your financial
That's all. So, that's where. How are you? I'm successful. So, I just thought Friday and Saturday. It wasn't quite yeah. Yeah, like just saying the Trump. But having done them, like some of them oh yeah. Yeah. Right outside of town. Like this dude, little shit. He's like, I gotta read these documents for fun. Yeah, it's like, yeah. And so like, well, what's your name again? I already have just crushes
Grant was like, the guy he works with, he's like,
I have some mild. Yeah, because he didn't move on.
yeah, so
No, I was actually well, I didn't have to bend it from. No, they're just just like yeah, bring her up. Hey, you can. I want to introduce you to
like totally.
It's good to meet you. What do you want to do? Now, what do you want to do?
What year are you? Can't invest in
Oh, you're about to start. What will
It's like,
My daughter,
it's just part of it. It's like,
she's coming back.
and then like,
I would right now.
So she's in
Like I know exactly what she's like.
No, now we can't. You want to well, okay, what I think about it.
So maybe I should call her. Yeah, I know. I'm trying to get her here.
They do a good job in college classes.
yeah, it'll be around tonight. Oh, yeah,
There are two kinds of there are colleges that are colleges with
all right. The thing is, I was like,
I saw the today
it's like, think about it. When I gotta go back.
There was a faculty meeting listen to it.
It's really like a it's like do you know that?
That's a fast movie. Yeah, but definitely.
I was already
I ran out. I'll see you later. Where else are you guys?
What I decided I really wanted to do is to be a speaker. Economics, and God gave me something. So I did that, and then I got into it second and then my remember, that's what everyone told me. Get out of school after a long time. You look at choices and just get a job with a good one. Just stay in school. I love it, just staying in school. So I got a job as a professor president. So I have very famous economists in the so send
Yeah,
out
two
to
more.
the
Yes,
teachers
tomorrow.
and
Yes, thank you.
Thank you.
called me Leslie and said, listen, you have to
Okay, yes.
serious times or have a good time. And they arranged for it to get John.
What are you doing now? Yeah.
And I think that's what most important is to figure out what you want. Don't shoot. But you'll also really like it. So that's the first thing. Just concentrate on you might actually enjoy it. When my daughter comes back in the fall, when you're in, she's at XAPS. We'll all have lunch at the faculty club. And she can talk about her Columbia experiences. And then when you get to the senior, if you want to go to business school, you'll call me. Okay? So it's a pleasure. Oh my God. She's very social. You'll like it. She's very serious. Although, by the way, the other no, it's okay. You'll be under a line. She's got like it's very pointy average, so which is what she's eating. So as we should do, she's doing so make sure you do your part, especially if you start to do well and you get caught up to make process. Yeah, pleasure to meet you. Maybe we'll see you at the lunch. That's all right. Too old. Too sad in my ways.
No, you're never too old. Sorry guys for
Yes,
So you're telling why you can't do it?
I can't do dinner.
挺好，那咱们去吃饭了。今天吃中饭。今天吃中饭。
So I gotta do it. And meals like this, try to find that sometime after class, 2000 we'll just start to talk this time.
We can put out.
Okay, so that's and they can be pretty good. So I don't know where you guys live. There's a small I mean, that's really actually moves the way that they
Okay, please, I'll see you tomorrow.
I'll see you
tomorrow.
tomorrow.
That's right. Back here.
Grab a bag. Okay, that was terrific.
Thank you.
And we'll take care of it.
Oh, good. Thank you. Thank you.
All right, yeah, we'll send
Okay,
it.
so what we'll do is sometime, and the other time that we can do it is, you're a graduate. So you would have this wonderful period when school is over, an actual graduation. I don't know if you're going to go home.
No, I am home.
Okay, so we can do it then.
Okay.
So we just sometime in the middle of the afternoon.
Okay, and are you going to be in Omaha?
I'm going to be in Omaha, but Jesus, I've got.
Yeah, many things to do.
I got 3 speeches to do,
Okay.
and I'm getting it at 7 in the morning.
All right, well, good trip.
Okay, are you gonna be there?
Yeah, I just found out that we got passes, we lucked out, so.
Okay, so,
So we'll see you there.
and as I say, email me about this conversation.
Okay.
And at some point, we'll get together.
Sure thing.
But not for
Thank
a
you.
meal. Yes.
Yeah, I wasn't an intro guy, I guess.
Right.
And I figured out the Simon guys, but it really hurt my neck. I got repetitive stress syndrome, and so it's a murder for me to use a computer. I was wondering if I could have more time for that.
The problem is that I have to send the final set. I've got about 25 papers.
Right.
I'm going to look at them this weekend. I'm going to send them to the 2 reviewers. Don't think it's possible.
Right.
On Monday.
Okay.
Because we have to announce, and there'll be like 4 or 5 finals. I really wouldn't worry about it. I mean, you know, once the grades don't have to be until the
Okay.
It gives you a lot of time.
Yeah.
If you don't worry about that, and it's just fun.
And the other thing is, you know, is it really, how necessary is it to be able to use Excel really, really fast?
What did Glenn Greenberg say?
I don't know, first years can't take,
Don't overcomplicate it.
Don't overcomplicate it.
Don't want to
And actually, did you pick, were you here for people?
no, I don't think we're supposed to, yeah.
You know, if there's seats, you know, you're welcome to sit in the room. No. What do you think the message is that he really brings? What do you think his specialty is? Because he's very concentrated, obviously. He spends a lifetime with his companies. So even if he doesn't buy at a given price, he spends a tremendous amount of time. And in fact, I'm going to tell you the story now about time. When we were talking about people like him, because I never care when he's down. It really worries me when he's up a lot. So he was up like more than 200% last year. Because, you know, he's naturally optimistic, and I hate stocks that go up. I like stocks that go down. But you can tell, so I'm very nervous. I was giving him a hard time about people like him, where he's made like, you know, from 2002 up just, you know, many dollars. And he said, look, I know more about that company than you do. And I know, you know, I've been dealing with them since 2002. I've seen those guys grow up. I know where they make their mistakes. I know where they don't. You know, they shade what they're saying. Or, you know, they're generally more pessimistic. I know where all the projects are that are not visible yet and that people can't see. And that's really the way he does the investing. So, you know, he'll sell out, and even once he's sold the company, he'll continue to follow. So it's that whole stress on evolutionary learning.
Right.
In that process, how important is it?
You don't need me, right?
Not that. Okay. Because you focus on a few simple variables that are really going to matter. Do a calculation analysis. And it's really, and you know, a lot of these guys, it should be clear, they're all extremely successful. And they're all successful not necessarily for the reasons that they think they're successful. But I think if you listen to them carefully, you'll see in each case
There's something.
what the special unique thing is that they do. And in this case, you know, he talked about learning and growing up with the companies and, you know, spending time, and that's really what it is. And the discipline is not to sort of spend the time, buy the stock because it's a bargain, put it in your portfolio and forget it. And then only pull it out when earnings season comes. I mean, you always want to look at these companies as if, you know, you own 100% of them and you keep up with them. And that's a very useful approach now. It means you're going to be concentrated. But when you're concentrated, and you see the reason why the knowing what you don't know is so crucial to that process is that as you evolve, those are the issues.
I have a follow-up question.
Thanks a lot. Really helpful.
And you know, with Beth Lilly is not the sharpest knife in the drawer by a long shot. But what she understood is if she concentrated as the biggest expert in companies around Minneapolis, and especially small cap companies around Minneapolis, she had a real edge. And she developed things over time.
So
So between like you and Greenwald, they both have highly concentrated portfolios, but I think the level of detail which they both go into is very different. Like how do you
What is really interesting? I think it should be clear that Glenn Greenberg is a better theorist of businesses. So he has models for what's a successful business. He focuses not on what he doesn't know is a long list, but the three things that are crucial, if you listen to him. He has a very, not model-driven in the sense you're talking about, but model-driven in a very particular framework that he puts around companies. And he sometimes stays with them for a long time and sometimes not. So Iron Mountain, he knew why he sold it, but he hasn't continued to follow Iron Mountain. So he really has a machine that he brings to bear. Li Lu's machine is a very different kind of machine. It's not as focused on understanding the basics of lots of industries. It's focused on historically developing long-term knowledge of these companies. And a lot of the time we're developing that long-term knowledge, and you just don't know why. Because you wait for the price or you wait for the understanding. But when you start out with a company, if it looks, unless it looks really idiotic, you will spend the time and over time evolve and learn about that company. So, and that's really the difference between the two. And I think if you listen carefully, you'd see that that was the case. Glenn Greenberg didn't talk about long-term histories, following companies over time. He talked about, what are the crucial issues going forward. That's a very different perspective. And, people temperamentally have different styles. So I think that analytically, if you just asked, Glenn Greenberg is probably, in some sense, a better investor. But in terms of final results, I think he did it. Because it's what he does well. He does so far.
How did you first come across?
He was in my class.
Oh, that was a long time ago, right?
Yeah, no, that's how I came across him, yeah.
Oh.
Came to my office and I gave him an HP on his paper. That was back in the days when I used to read the papers carefully. And he pointed out to me he made a lot of money in the stock, and he said, and this was, I don't think he remembers this, but I said, look, you made a lot of money in that stock, but you did not know what you were doing.
That's often the case.
So that's how, and he was, he was obviously very versatile. And in those days it wasn't production. It was we had 70. We did not in 301, but in one of those little sideways. And so if you really, the first year, which was the year he took it, Buffett came, or the year he showed up, Buffett came, and we had 70 spaces in the room.
How long back did he stop?
He used to come every 2 years, and sometimes the deans always want to develop a relationship with him. He's just not interested. So the first year he came to that class, that went really well. He answered a lot of questions and very.
Do we have a video of him?
I don't think so. No, I don't think so. I'm not a mess. Don't forget that was back in, I think, 1993. 1993.
He was 96, I think.
Yeah, 96. Maybe it was 94, but he's class of 96.
So he's class of 96, yeah.
So he arrived in 94, and it was fall of 94 that Buffett showed up for the first time. Then the dean decided he wanted him to do a joint appearance with Dennis Weatherstone and his head J.P. Morgan. That was very stiff for Buffett. Then he came, by the time he came back again, we were in this room. We were in 301, so it was just a little bit dynamic. So that was the only time it was a real. There was another time. There was a funny. Because one year, I knew the long-term capital management. So that's been before. That's been like 97, 96, just after we graduated. And I asked, because it was a cult then. I didn't want to offend anybody. But I asked them, why these guys were the investors. Most people said no. But Buffett said, oh yes, and decided to try to do a security analysis. And the funny thing was, he came before Because we actually got, in the long-term capital management, there was the public face of it, and there were the really smart guys, and we actually got Larry Hildebrand, who was the guy who really did the come. And so he said, are you getting those guys to come? And I said, yeah, we got Larry. Larry's coming with Eric Rosenfeld, so it's not just Eric. So, he wasn't the president of the business school, it was really the public face of the operation. And, he said, you should listen to this. And he said, those guys are getting so rich, I don't care And that was in this room. So he must have come about 5 times. Then we took the class and I got home. And then they did a selection. And he sent you out to the movie.
I mean, like I was filling my yearbook, like what was your high point of CBS, and I was like, the Omaha trip.
Right, you guys have graduated, right?
No, we were
going to graduate.
Oh, when did you do the Omaha?
I did the
17 people?
The 17 people.
Yeah, I went last time.
Oh, okay.
But
That's a waste of time as far as I can see, because you got thousands of
Right.
people. And most of them ask stupid questions like, how did you get to be so wonderful?
How do I become rich?
Yeah, or as opposed to Glenn actually asking the class, what was his target return?
Oh, was that here? When he gave that 20% number?
13%, yeah. So, and Glenn asked the question, and it was interesting. Glenn is greedy.
I know, he said that. He said I have 15.
Okay?
Right.
That's all right.
Okay.
So, I guess we both had a question that you could answer. I don't know if you want to.
Yeah, no.
Basically, we're graduating now and things are really hard to find jobs. So, what would your advice be?
I would really, if you talk to her, and what does she say? I mean, is she...
It's like there's a lot of people out there. She's pretty good.
Yeah, no, don't just keep in touch with her, because the first year we did it, you're looking for very specialized jobs.
Right.
You may in the end have to take sell-side crap or something like that. And, go to all the meetings and do the analysis and impress people and go to buy-side jobs or whatever. But, the very first year we did the program, we didn't place the last person. So keep in touch with her or her successor who's she's going to be around till October, and I think that's probably pretty good. Because one of her jobs would be to deal with unemployment. So, don't worry if, the jobs come in over time. And if you keep in touch with her, we'll know about what's going on. Okay?
And I wanted to chat with you about what we were talking about that day when my cousin was here, just about going to India. And
well, I'm not going to India again. I'm not going.
No, I said like me going to India and say working.
Well, don't you want to do that in the end?
I do, but I don't know what to go there to right now. I don't know.
I will. No, look. Your first job, the most important thing is who you people.
Right.
Because they're going to train you. There's not a lot of people, unless there's somebody in India.
You met everyone in India.
Yeah.
You met the whole
Right.
community.
And I don't think there aren't a lot of jobs. It's a small community.
It's a very small community. No, there are a lot of jobs. I mean,
if you can get a good job in India.
Anyone you met in India who impressed you?
I liked them all. I mean, I feel like it was a...
This is not a beauty pageant.
Right. Yeah, how does it work? I get up on that stage. I did 2 talks.
There's about 50 people each.
No, about 300 people each.
Seriously?
Oh, yeah.
Wow.
No. They were both full. Maybe 200. So, I have my hosts, I have to pay attention to them. One of the talks, you know a guy called Niraj Bajaj?
Yeah, he's the Scooter family.
The Scooter family. Right. So he was my student at business school years ago, and he was in my wife's section. So he showed up, and I had to talk to him. So guys come up and you sign the book, and you don't really, they give you their cards, and you wind up with 80 cards from each one. And somebody says to you, they say, you just signed a book for a billionaire. So, Which one was he? So I just, look, it's like the class of strategic behavior. I just don't very much of a feel for who the individual students are. And the one I know is this guy because I had lunch with
Sanjay Bakshi.
Sanjay Bakshi, because then that was, because he really was the one who got us to go.
Right.
He's a very smart guy.
Yeah, he's an excellent. I told you I spoke with him.
And I would ask him, he'll know these people better than I do.
Right.
And he's the one who will talk about not me, because I just, flash by, and that's why. And every so often, one of them will come to the United States, and I'll think I remember who it is, so I'll have lunch with him. So I would look in India, and I would look at talk to Sanjay, see what he thinks about these guys, what they're going to learn a lot from. And if there's nobody you're going to learn a lot from, then stay in the United States.
Well, Sanjay stayed on Naples because I told him, and I also told him that I'm a part of the program,
right.
All these people, and he was like, you have to realize that your learning curve is way steeper than what it is. So you're anyway 2 years ahead of anyone who is working here.
Well, but they're good value investors.
Yeah, but the community is like 8 people.
Okay. So don't do that, John.
Yeah.
So wait and see if you get something in the United States.
It's too small. It's too small to go in there and expect to be trained because I think it's like it's just.
No, usually what happens is what good training is you work for a portfolio manager, you discuss an idea whether it's worth pursuing. You come back to them, you ask really good questions. You'll know the history of the company. And you'll basically, through that interaction,
understand what he's doing.
What he does, it's like an extended applied practice.
Right, exactly.
That's the best way to do it. But if there aren't really people like that who have jobs in India, there are people like that who have jobs here.
Right.
Those who are sure. And then sooner or later, when you're ready, you go back as partners instead of fun.
That I'm ready to do.
By the way, don't start right away. If you've learned one lesson from this news, character and experience matters a huge amount. Do your learning when somebody else has done it.
Yeah, totally. And you're absolutely right. It's like, when you come in there and you take the hit and you've got your investor, clamoring at your back, it's not fun.
You don't have a record for people to plan on.
Right, so it'll take a long time to develop. Okay?
Thank you.
All right.
Thank you.
Yeah. I think my brain has gone.
Sorry, one more question. I spoke to Erin yesterday, and I was just asking people for an internship opportunity. Is a good idea?
What did she say?
So she says you should. She also said that I should probably talk to you and find out if you think you know anyone who's sort of looking at.
We're not at First Eagles. We don't do. The reason we don't do interns actually at the moment is that in an internship you work for free.
Right.
And the implication is if you do well, you'll get a job.
Right.
And we're not hiring.
Right.
So if we did an internship